ECB signals prices carry off, eyes bigger pass in Sept. Amsterdam. The European Central Bank ended a long-running stimulus scheme on Thursday and signaled it'll deliver its first hobby charge hike due to the fact that 2011 subsequent month followed by way of a probably larger move in September if inflation does now not quiet down. With inflation at a record high 8.1% and still growing, the ECB now fears that fee boom is broadening out and will morph into a hard-to-break wage price spiral, heralding a brand new generation of stubbornly higher charges. The significant financial institution for the 19 countries that use the euro stated it's going to give up bond buys on July 1, then improve hobby prices by using 25 foundation points later that month. It will hike once more in September and may choose a larger move, a 50 basis factor hike that might be its biggest one-off increase on account that June 2000. We will make certain that inflation returns to our 2% goal over the medium time period, ECB President Christine Lagarde said in the course of an information conference. It isn't always just a step, it's miles of adventure, she said of the actions signaled on Thursday. The speedy upward push in inflation changed into driven first of all by means of strength and meals charges as economies emerged from COVID-19 lockdowns, but Russia's invasion of Ukraine has accelerated those traits. The size of charge hikes to reduce rate increase has been intensely debated by using ECB policymakers, with chief economist Philip Lane preferring 25 basis point actions in July and September, but others arguing for 50 bits per second to be taken into consideration. Supporting their case, the ECB raised its inflation projections another time, now anticipating inflation at 6.8% this year versus a preceding forecast for 5.1%. In 2023, it sees inflation at 3.5% and in 2024 at 2.1%, indicating 4 straight years of inflation overshoots. The Governing Council anticipates that a sluggish however sustained direction of similarly will increase in interest rates can be appropriate, the ECB's monetary policy announcement said. High inflation is a chief task for every person. Markets moved to fee in 143 basis points of fee hikes via the end of this year following the assertion, up from 138 BP earlier, or an increase at every meeting from July, with a number of the actions in excess of 25 foundation points. They are also watching for a mixed 230 foundation factors of actions within the deposit fee with the aid of the stop of 2023, placing the interest price hike close to 2%. That left ECB President Christine Lagarde, who simply months ago stated that a fee hike this year was surprisingly not likely, in a complicated role at her Thursday news convention. Nevertheless, she confirmed little hesitancy, underscoring some of times how the financial institution deliberate to steadily hike its prices at upcoming meetings. She additionally vowed no longer to permit the borrowing expenses of former euro area debt crisis nations to be driven wildly higher via financial markets again. We are devoted, Lagarde stated. The ECB's notable hike in over a decade will nonetheless go away, it trailing most of its international peers, which include the US Federal Reserve and the Bank of England, that have been raising aggressively and promising even extra action. Unlike the Fed, the ECB additionally has no plans to reduce its stability sheet, with policymakers reaffirming their dedication to maintain reinvesting coins maturing from the €5 trillion worth of public and personal debt the ECB holds. Graphic, markets guess ECB will hike interest charges rapid. Where does it end? While the begin of coverage tightening is now set, the stop point remains unsure. Lagarde has said that charges should pass towards the neutral factor at which the ECB is neither simulating nor protecting returned increase. But this level is undefined and unobservable, leaving investors guessing just how some distance the ECB wants to move.